The following program is sponsored by Max Out Savings Advisors. The views expressed during the broadcast are solely for entertainment purposes and do not necessarily express the views of KNTH, its management, Max Out Savings Advisors, or its sponsors. Max Out Savings Advisors and members of the Max Out Savings team may or may not hold securities mentioned during the show. Plan for your prosperity, prepare for your retirement, safeguard your savings, and nurture your investments. This is the Max Out Savings Show with Ted Gioka, a presentation of Max Out Savings Advisors. Now, here's your host from Max Out Savings Advisors, Ted Gioka.
Welcome to the Max Out Savings Show. I'm Ted Gioka, and we're talking savings, investments, and your retirement here on the Max Out Savings Show, one of Houston's longest-running financial radio shows. Gotten incredibly popular. We've been on since 2006 talking about savings, investments, retirement, and the world today. And we try to bring things that other people aren't to you so you can understand the world and get ahead of things. And our motto and our philosophy is to save aggressively and invest conservatively. Save aggressively and invest conservatively. We've got a lot to talk about as usual on the show today. But coming here for year end, we want to hit the idea of save aggressively, invest conservatively. If you're not where you need to be for your retirement savings, the year end's a great time to come in, go in, talk to your HR person, increase your savings rate. We recommend everyone save 10% plus the company match, gets you to about 13%, which is where you want to be for retirement long term. If you're getting in your 50s, now's the time when you want to ramp up retirement. The government gives you special dispensation to, in your 50s, you can save additional amounts of money because they know that people then tend to make more money. They have a little freer money at that time, and they can really build up their savings. So it's actually surprising. If you start when you're age 50, you actually have 15 years of your top peak earnings rate to build up that savings. So take advantage of that. Go to your HR person, take charge of retirement, and build up your savings. Remember, every time you put into a company savings program, you get a tax deduction for the money. It goes off of your gross income. So you're going to get a little money back for that. It's going to grow tax-free. And as we've talked about in this show, one of the secrets that Warren Buffett did when he started his company, the first thing he did was go buy an insurance company because insurance premiums can grow tax-free inside the insurance company. And so he wanted tax-free growth. Well, the government gives you that. Take advantage of it for your retirement. Other things coming up as we talk about, you've got year end. Now's the time to do a little tax planning, to sell your losses if you have some to offset the gains. You can take up to $3,000 a year in losses against ordinary income. Above that, it becomes a tax loss carry forward. So take care of that. Remember, you have required minimum distributions that have to come out. Those things need to come out if you're over the age of 73 in an IRA account. If you've inherited an IRA, you have to take those out, or a Roth IRA, you have to take them out during that time. And there's past 2020, you have 10 years to take it out. Before then, it was kind of a life expectancy. Now it's 10 years, and that's a problem. If it's a small IRA, it's not, you've inherited, it's not a big deal. But if you inherit $500,000 and you've got to pay out, that means you got to take out $25,000 a year, which means your income goes up $25,000 a year, and so in those cases, it really takes. It's one of the few areas that really takes some tax planning, and because you got to remember, it's increasing your income, and it's not unusual for someone to have $1 million IRA. Well, if they inherit it, that's $100,000 a year on your taxes, which really puts you in a high tax bracket typically, and so. Particularly for smaller ones, one of the better ways to do it is you get the money to come in, increase your savings at the company, just ramp it up. If you're saving 10 or 15, you can save up to 20%, up to $20,000, $20-something. Make sure you're saving as much in your 401k so it goes from one pocket into the other and doesn't create a taxable event. If you put it away in an IRA, you can put away money there and again reduce the taxable event. So you're just basically taking it from one pocket and putting it in the other. If you just put it in your bank account, you're creating a taxable event. So with IRAs, with inherited IRAs, it takes a little bit more planning on those things, but the stuff is due year end. The first year you have to April of the next year, but then you have to take 2 payments out. So understand these are some of the things that have to go in. There's still time if you want to if you're over the age of 70 and a half, you can actually take your RMDs out or just money out in general out of an account and have the company send it, your custodian send it right to the church, the school, or the hospital, wherever you want to send the money. Coming up, and then it doesn't go into your gross income. It doesn't come out as income. It just comes out as a wash, which means when you're doing your gross income, it's not affecting you for Medicare and things like that. You're in for giving. It's a time to give money. Wealthier people tend to give money differently. They do things. They'll come in and they will put together and I want to cover some of these things. They will oftentimes have a budget because wealthier people get asked for money a lot more. Real wealthy people get asked for money all the time. And so they have to have some defenses put in place. And typically what they do is they come up with a giving budget at the beginning of the year of X number of dollars. And once they hit the amount, that's it. They shut down the giving unless it's just some super special case. And so, once you hit the budget, that's it. And because there'll be an endless group supplies of people asking you for money. Just make the mistake of giving to the Republican or the Democratic Party. I mean, you're going to be besieged with requests for money. And so wealthier people, they'll come up with the budget. If they give out $10,000 a year, that's what they do. They allocate it out, maybe to the church, to the school, or whatever, and then they keep a little extra for special events, and that's it. The other thing they do is they will give appreciated stock. So if you have some Exxon stock, for instance, and you've had it in the family, forever, and you have a low cost basis of maybe $30, and the stock is over $100, you can give $10,000 worth of Exxon to your church or to the charity, and you don't pay taxes on the capital. You don't pay capital gains tax on that. It just goes right over to the charity. The charity will sell it, and they'll put it in their account, and they will sell it out, and then you get a deduction of $10,000. So they use appreciated stock to make the gift, so they're not paying taxes on it. Some people, they'll take, I want to give $10,000, so they'll go sell the Exxon stock, and then they have a big capital gains they have to pay, and then they write out a $10,000 check. So this is another way to avoid your taxes, to protect yourself. Another one, as we talked about a little earlier, is you do the qualified charitable distribution out of an IRA. Remember, you have to be over 70 and a half to do that. And so like at Max Out Savings Advisors, our assets for our clients are held at Charles Schwab. So we'll send in a thing to Charles Schwab. Please make this check payable to, Second Baptist Church or, Texas A&M or University of Texas in the name of Billy Bob Smith, and the check goes right out of the account. And so when you get your 1099-R, it doesn't show that you have $10,000 worth of gross income. Then you take a deduction off of that. It just is a wash on the qualified charitable distribution. So when you're doing your Medicare or something, they're not seeing a higher gross income. So remember, wealthier people give things to charity differently. They'll do a budget, and they'll stick to the budget. They will also they will give appreciated stock. They will also give qualified charitable distributions if they're over 70 and a half. They can also negotiate. If it's a bigger gift, you can negotiate. There's flexibility with a lot of these groups as well, and understand you can talk to the groups if you want to make a larger donation. They tend to make it a little bit more targeted, particularly for larger donations. I want it to go for here, I want it to go to the football team, or whatever. It's to the volleyball team, or I want it to go to scholarships. Or scholarships from people from Houston, Texas, or whatever. So you can also target your giving if it's a larger amount, and And so it never hurts to ask on these things with the charities if you can do that. And again, it's end of year. If things have done well, now's the time you can give back. But there's ways to do it that will help you out and get you where you need to be. But this is for giving coming up. You have to year end. And again, these gifts, they're tax deductible, and so that's just another option you can do there. They've changed some of the giving. There's actually a certain, I think it's $2,000 you can give now, where it doesn't even go into the itemization. I'm going to get you an answer for that after the break as well. So these are some of the things. Are you saving enough money for retirement? You need to increase your savings. Have you completed your charitable giving for the year? Have you taken care of your required minimum distributions across the board? Though these are things, are set up. If this isn't done, make the changes. Call your HR person. Increase the value of your savings, your percentages. The number, as we talked about, is really about 13%. If you do that, it's called income-based savings. And income-based savings works if you're making $30,000 a year or $300,000 a year. It's the same thing because you're saving up to where your savings goes. Remember, save aggressively and invest conservatively. When it comes to giving, another thing I try to find people that either you really believe in the program or people that need the funds. I mean, some and I don't want to use. I'm not going to use any names here, but some people pretty obviously they have plenty of money. They're building. It looks like it's the Taj Mahal. It's just sometimes people don't need the money, and so use a little discernment in how you're giving the money to try to get it to some place that's going to really make a difference. Ask them how it's going to make a difference. But and then stick to that budget. If you don't have a budget, now's the time to plan for the budget for 2026. Get that budget going, and that also gives you the ability to say no as well. Wealthier people they're very good. They develop very good senses on how to say no. It's not because they're bad people or they're stingy or anything. It's just that there's so many people that ask them for things, they have to develop that ability. And if they don't, it just almost becomes, they tend to go right through all their money. And so particularly if people inherit a bunch of money, win the lottery. I mean, we did a show years ago on the percentages of people that actually win the lottery that lose all their money. And it was like, I forgot, it was like over 80%. Do that, and one of the problems is they don't develop the ability to say no. They don't budget. They don't say, well, I'm going to give away this much money to different people, and then that's my budget, and I go through it, and you outline who you want to give it to, and then you have to develop the ability to say no. So that those are some of the things coming in for year end. We're going to be discussing some of after the break coming up here. Really, what our outlook is for 2026. And where things are going, we continue to believe we're going to see some pretty interesting things happen in 2026. The other thing we're going to be touching base on is we're going to be talking some more about 401k plans. We're going to talk about what's going on with the precious metals market. Again, huge return this year on that. We're going to be discussing that and where do we go? It's really, and we got some real interesting things coming up on with some of the countries overseas, which we actually hold assets for our clients, but we're becoming concerned about the safety of the assets, and which is really going to be fascinating. And one of them is the UK, and so we're going to get back after this quick break discussing that. Are some of these countries safe to hold assets, and will this trigger some type of financial crisis in these countries as some of these countries just kind of become a little bit more, the draconian and dictatorship on their political beliefs and stuff, and will it become a problem? Will it lead to some of their financial systems destabilizing? So real interesting things coming up. We're going to take a quick break right here on the Max Out Savings Show. Stick with us. We got a lot of interesting things happening, a lot of things happening in the world today. We'll be right back after this quick break right here on the Max Out Savings Show.
Hi, I'm Sam Malone, the owner of Houston's cutting-edge media company called 512 New Media. At 512 New Media, we create amazing videos that companies use on their websites, telling their story in bold colors with exciting animation and graphics. At 512 New Media, we also shoot television commercials and instructional videos. And if you want to show off your business from the air, we're ready to go with our drone video aircraft. Let us help you create your media message. We're online at 512newmedia.com or call 281-822-8803. 512 New Media is Houston's only media creation and distribution company that's actually owned by someone who's currently on the air. And that gives us an incredible edge when creating content for consumers to use on their laptops, tablets, and smartphones. Standing by to create your message, we're 512 New Media, 512newmedia.com.
I'm Ted Gioka, and I approve this message.
Inflation, instability of the market, bonds, precious metals, oil and gas, and lack of old-fashioned cash puts your retirement at risk. It takes a different type of portfolio to deal with these issues, and that's where Ted Gioka can come in, and he can help. Go to MaxOutSavings.com and schedule some time with Ted. That's MaxOutSavings.com. And listen to the Max Out Savings Show every Saturday at 10 a.m. on AM 1070 and FM 103.3, The Answer.
Welcome back to the Max Out Savings Show. We're talking savings, investments in your retirement here on the show. And we're just talking about the charitable giving. The one other thing that happened is the IRS has kind of really clarified the rules on inherited IRAs if it's a non-spousal inherited IRA. And up until now, if you inherit the IRA in 2020 or later, the rules are 10. Everything has to come out in 10 years. But now the IRS has said, look, it's got to come out. You've got to start taking money out. Some people haven't been taking out money for the last 3 or 4 years. If you have to start taking money out by the 31st of this year, which that's a big change as well. And again, we're seeing some more of these different tax things out there. The other thing is for charitable giving, taxpayers who claim a standard deduction can also claim up to $2,000 for a married couple and $1,000 for single couples as well. So if you in the past, if you're giving money and you don't qualify, so a lot of people are just taking the standard deduction because it's so large. This now you can take up to $2,000 and you take your standard deduction plus you can deduct up to $2,000 worth of giving, which is a really good deal. So those are a few things. A couple of things we wanted to provide. Interesting story here. Where is it? The UK Starmer, the Prime Minister Starmer, they've kind of gone off the deep end in the UK, and it's starting to become a concern. United Kingdom, the government they froze the assets of Roman Abramovich, who of about $2.5 billion when he sold the Chelsea FC team, and now they want to take the money. Starmer was demanding that these funds be used for humanitarian aid to the Ukraine, and they might take action to enforce the requirements. And so they're saying, look, you're $2.5 billion. I know you sold the team. Since you're Russian, we froze the assets, but now we're going to take the money and we're going to give it to humanitarian to help out the Ukrainians. Well, look, I've got no love for the Russians, but what I kind of thinking is if they'll do it to the Russians, they'll do it to other people too. And so the question starts coming in is, what are the other assets? And there's a lot of big UK companies, Unilever, I think that's based over the Shell Oil Company is a big one. We own that for our clients. And understand that under Prime Minister Starmer, the UK has jailed over 12,000 people for internet postings criticizing the government or saying things. By the way, those numbers are higher than Russia, China, than anywhere in the world. So the question comes in, if you're running a Twitter account in the United States and you own stock in Shell Oil Company, is Prime Minister Starmer in the UK, are they going to confiscate your shares in Shell Oil? And I think this has to come up, because where does this type of stuff stop? I mean, the UK is starting to really look like Nazi Germany. You criticize Adolf Hitler, you go to jail. It's the same thing there. 12,000 people, for putting out tweets and stuff is an extraordinary number, and it's a real concern. And they're an ally of the United States, but what if they get mad at us because we're not supporting the Ukraine enough? Or what if one of our clients tweets something out they don't like and they try to confiscate their shares in a company, or if they have a bank account. Most Americans don't have bank accounts, but they own shares in different British companies, and so this is a real concern. And if people don't think their assets are safe in Britain, money is going to start coming out of Britain, and it could destabilize the financial system over there. Now, they're likely to put on some type of capital controls because of this, but the problem comes in is if you're not a good steward, if people think, particularly in other countries, they have assets in that country, and if they think based on your political beliefs or what nation you're from, you're going to get your assets confiscated, then they're not a safe place to be. And the UK has always been a safe place people could store, the huge gold holdings, and a lot of the gold warehouses are there. And so, but the question is, can these people be trusted? And so this is you're not hearing about this from anything else. It's a concern. We're looking at it real hard, trying to figure out what to do with it. But it could cause a run on the pound if people start selling it or selling assets, and they could institute capital controls. And the question is would the capital controls include the stock itself? And that's what we're not sure of. But this is something we're watching closely. And again, it's not just the $2.5 billion of Roman Abramovich's assets. The other part to the story is the 12,000 people put in jail. And the question is, if I'm out there shooting at the ranch or something, and I put a picture of me Twitter on it with a gun, I mean, do I come waltzing through the airport at Heathrow, and all of a sudden do I get pulled off to the side? And we don't know that. And this is kind of, I mean, even in China they won't do that, but the UK is becoming a problem. So this is something to watch there. So anyway, that's just one thing. Really, this kind of goes back to this whole defense strategy report that came out of I believe the Defense Department, that the U.S. is not sure about Europe, because we're supporting NATO and they have to help support it, but they seem to just be going off the deep end. They flooded the countries with immigrants. They've instituted draconian controls on free speech. If you look at particularly Germany, where they closed down their coal power plants and they closed down their nuclear power plants. Electricity, some of the highest prices in the world. Now their chemical business is being destroyed. Their industrial base is being destroyed, and these countries are in big trouble. They have big debts. The Europeans have huge pension costs, huge all types of benefits and entitlements over there. And the question is, can they afford it with no industrial base and things going down? In some places, it's going pretty. Norway's doing well. If you look at Italy is kind of really building out their industrial base, but some of them are going over. And so the question is, this whole thing is starting to question. Look, how bad is it going to be? If you look at Europe, they bet big on, hey, we're going to have to decarbonize the world, we're going to try to get rid of countries in ethnic groups to a point. And so we don't really want the French or the Germans, the Italians or the Greeks. We want people that are just going to be EU. So we're going to bring in, millions of illegal immigrants into Europe, and they're going to assimilate and be European, and they're going to kind of wash out and dilute out all the Germans and the Italians and the Greeks and the French. And then in addition, we're going to decarbonize, and we're going to get rid of oil and gas, and everyone's going to have electric cars, and we're going to raise the cost of energy. Well, if you look at the United States, we're like, hey, we're going to drill more, drill, baby, drill. We're coming up with AI. We're going to have free speech. We're going to have X, and we're going to build out the factories in the country, and we need those factories. We want them to have low-cost energy, so we're going to try to build out more electricity plants, more natural gas plants, nuclear plants, and all that, whereas they're closing their plants down over there. And so Europe really bet wrong. I mean, they basically bet wrong, and the Americans and the Chinese and the Russians and other people around the world bet on growth. And those guys kind of, I'm not sure, they just bet on this, rebuilding the new world order in kind of a, more of a serfdom type of place. And it's really starting to fail. And this is something I think is going to continue to watch going forward. They keep pushing for war with Russia, and you're kind of like, you guys can't even fight anything. And it's like, wait a minute, why would Russia want to take over Europe? What are they getting? They're getting a bunch of high debt countries with a huge amount of entitlements and retirees and pensioners they got to pay for. The industrial base is disintegrating over there. What in the past was valuable is all going away. But so I think they're going to have to come to recognize their issues and kind of really redo their whole countries. And it's going to be interesting to see for 2026 what we get on that and where it goes. But it's becoming a concern. And and growth is really shifting to Asia. If you look, that's where we're doing more business. That's where we're developing relationships with. That's where people we're getting along with more than the Europeans. And so this is something I think for 2026 is going to be a big story going forward. Is how does this all play out? One of the other things out there is looking at the markets. We continue to see, as we talked about on the show a lot, is if you watch CNBC or the news channels, business, it's been a constant 24-hour, stream of AI this, AI that. AI is going to do this. AI is taking over the world. We're going to spend trillions of dollars. And if you look at most of these stocks, they haven't really done that well this year. They're up some. A lot of them aren't. Some of them aren't even up that much. And if you look at the precious metals, which you've heard virtually little, I mean, the classic was when gold broke $3,000 an ounce, and CNBC covered it for I counted it. It was about maybe 90 seconds. Oh, look, gold just broke 3,000. And it talked for about 90 seconds. And then they immediately shifted over talking about NVIDIA again. And if you look at some of these companies, it's been really interesting. If you look at NVIDIA is the same place it was back in July. If you look at Meta is the same place it was back in the same place it was actually at the beginning of the year. If you look at Microsoft, same thing. I mean, and it's all we've heard about these companies is this, and they haven't even hardly gone anywhere. And there's been, since basically October, there's been very substantial distribution, and this has been one of our concerns that we've been talking about. There's been distribution in the tech sector, and distribution was kind of a fancy word, but what it really means is really big holders of the stock are selling into the market, and they're selling in. So good news comes up, that pops up, and then immediately the stocks start going down again. This isn't individual investors. This is big hedge funds, big institutions, and they've been doing it. If you look at the NASDAQ, it's the same place it was in October, early October. And actually yesterday, earlier in the week here, it was the same place it was back in September. So there's been all this talk of AI. It's been all types of exciting news, great news from NVIDIA, fantastic earnings from everybody, huge orders from Oracle. Oracle's got a huge order from OpenAI. It jumps up 40%, and now the stock's fallen like 50%. And it's below where the level was. And so this distribution has really been going out there. The same thing with Bitcoin. Bitcoin was barely up, or was down the other day, year to date. And so there's been massive selling in this, and I don't really not sure why this is happening. We've had 3 good years in the markets, and that could be it. Or is there something else going on out there? If you'd have really asked me a month and a half ago or a month ago, I would have said, look, the market's going up into year end with the Santa Claus rally, and gold and silver are probably going to sell off. Instead, gold and silver have continued to go up. And really, in December, we're actually down year to date in December on the market, on the S&P. And you go over to the NASDAQ, and again, this is it's kind of the same thing. It's down for December, whereas if you look at something like silver is up. It started the month at 57. It's 66 now. And it continues to hit new highs. I mean, silver has exploded from about $32 up to $6. It's doubled since June. Gold, the same thing. Massive buying and hadn't stopped. Huge buying out of Asia. Huge buying out of from individuals in Asia, not just China, but from central banks around the world. But the public in Asia, which has massive savings rates, they've been big buyers. But the more interesting thing is the NASDAQ, which has not really gone anywhere. And why that's important is these big tech stocks have massive market capitalizations. And you take about the top 10 stocks or so, they're over 30%. They were over 30% of the S&P 500. So if you're invested in the S&P 500 or a large cap fund or all those, you're a third likely in tech stocks or more. Some of the numbers are close to, if you really add them all up, closer to 40%. So retirement funds, 401k are way over invested in tech, and now it's not working. And this is something we want to watch closely. I think for 2026, the market broadens out. But does things is there a real issue with tech? What's behind the selling in tech? What's behind the selling in Bitcoin? Is there something else out there? And this is something I think we want to continue to watch here. Again, massive distribution in mega cap stocks, massive distribution in selling in the Bitcoin, but precious metals are going up. That's telling you something. We'll be back right after this quick break on the Max Out Savings Show to discuss some more of this.
Hi, I'm Sam Malone, the owner of Houston's cutting-edge media company called 512 New Media. At 512 New Media, we create amazing videos that companies use on their websites, telling their story in bold colors with exciting animation and graphics. At 512 New Media, we also shoot television commercials and instructional videos. And if you want to show off your business from the air, we're ready to go with our drone video aircraft. Let us help you create your media message. We're online at 512newmedia.com or call 281-822-8803. 512 New Media is Houston's only media creation and distribution company that's actually owned by someone who's currently on the air. And that gives us an incredible edge when creating content for consumers to use on their laptops, tablets, and smartphones. Standing by to create your message, we're 512 New Media, 512newmedia.com.
I'm Ted Gioka, and I approve this message.
Inflation, instability of the market, bonds, precious metals, oil and gas, and lack of old-fashioned cash puts your retirement at risk. It takes a different type of portfolio to deal with these issues, and that's where Ted Gioka can come in, and he can help. Go to MaxOutSavings.com and schedule some time with Ted. That's MaxOutSavings.com. And listen to the Max Out Savings Show every Saturday at 10 a.m. on AM 1070 and FM 103.3, The Answer.
Welcome back to the Max Out Savings Show. We're talking savings, investments in your retirement, talking about the markets here. We're just talking about, again, this distribution that's out there in these big cap stocks. And this is something we want to watch closely into year end. What's really going on? Is there something going on that we're missing? What we think is Donald Trump has got, the number we're using is about $500 billion worth of factories coming in. Because of a couple things: AI, defense, huge ramp up of defense spending because of the Russia situation, the China situation, which just have not stabilized in both cases. and also companies bringing back drug companies, auto companies, all types of people bringing factories back to the United States. He goes and talks to these countries like Europe and Japan or Korea, and like, we're putting all these tariffs on. They go, well, look, we can negotiate. Tell you what, we'll put some factories here. We'll cut the tariffs to 15%. And he goes, okay, we can work with that. And so his number's like $2 trillion. I've tried to give it, come up with a reasonable number. Now, that's been going on for the last 6 months, since April, 7 months. Well, and they've been planning before that. Well, it takes time. We're putting a factory in Houston, Texas. Well, you got to find the factory. You got to talk to the people in Houston to get special tax breaks. You've got to find a contractor. Well, those are all going to start kicking in. Now, they're building out AI right now. They're building out defense plants, but the other plants are going to start up next year. And I think you're going to see the economy do reasonably well. We had the government shutdown last quarter. I think it's going to probably add a percent or so to this quarter coming up, and particularly the first quarter of the new year, because some of these things just couldn't get spent because of the government shutdown, which just ended a couple weeks ago. And so you're going to get a bump there. So I think you're going to see a reasonably good economy next year. President Trump, look, they're really under the gun. I mean, the United States, it's really becoming more like an African dictatorship type of nation. Not really a dictatorship, but an African democracies where the new team comes in, and then you immediately try to throw the rest of the people in jail, or they have to flee the country. And we're coming up with Congress is going to, they get congressional off presidential election year. Congressional elections come in, and if the Democrats get the House in particular, they're going to want to impeach Donald Trump. They're going to want to impeach J.D. Vance. They're going to want to impeach all the cabinet members. And then they're going to be having. They want to basically throw everybody in jail. And Trump's investigating them, but honestly, for everything they've done, there's been remarkably little action against them. Whereas under Joe Biden, I mean, they were trying to get Trump for jaywalking across the street, and they were going to build a gallows and hang the guy. I mean, it's almost not an exaggeration. And so the problem with that is that puts enormous pressure on the heads of state in the United States to sit there and not turn over power. Because it's not just, well, they change the policies, but you're going to throw everybody in jail. This is what they do in African countries. This is why it's so hard, to change over. You get these dictators that last forever because they can't leave. The minute they do, everyone's going to get killed off or put in jail. And the United States has morphed into that under Joe Biden and these radicals that they had at the FBI. And so what the problem is they're going to fight like the Dickens to sit there and keep the House. And so he's going to put everything he can in place to try to make sure things go well, and Trump gets reelected. And so I think they're going to try to, you're going to probably see a good economy, but that does not mean you're going to have a good stock market, because you never know. I think with all the heavy borrowing the United States is doing, we'll probably do over $1.5 trillion in debt at least next year, deficit for the United States. And then you put that on all these defense plans we're putting in. We're putting $1 trillion or $1.5 trillion in spending for AI. You got these other companies all putting back plant and equipment. Well, a lot of these companies, they're spending so much, they're going to have to cut back spending. They're going to have to cut back stock buyback programs. In addition, it's likely the longer in interest rates aren't going to fall as much as people think, because there's such a demand for money. And so I'm not convinced the stock market's going to have a good year as the economy. Something to watch and see. We're going to be coming with our outlook. Some of the things we like natural gas. We like some stable demand, very specialized type of stuff. We think some of the stuff for building is going to do well next year. We're going to be talking more about that. But one thing I wanted to talk about is old 401k plans, or if you leave the company, go to another company, and you leave your plan there. The question is, what do you do with it? It's cheap, you're used to it, and the question is, do you keep it? And we've really come across some issues with people holding older 401ks, particularly older people with RMDs. It becomes a huge problem. The withholding on required minimum distributions on 401k plans can be just usurious. And if we've come across situations, people in their 90s having to take 23% of their plan out each year just on required minimum distributions. So whereas if they just ran the regular IRA calculations, the number's closer to 9%. So you have to take over twice as much money out in your plan, so you deplete your plan. In addition, what we're finding, we're working with some of these people is, look, most of these companies have outsourced their plan. Particularly if you're not working for the company, they just don't care. We had another instance where several large checks, substantial checks, were sent out. One was sent out for a year and a half, never got cashed. They never bothered calling the client. They never told anything. And in addition, we had a case where they didn't even do anything. They didn't even do any withholding on large checks sent out, because they just don't care. Most of these companies have kind of farmed this out. They don't want to deal with it. It's a cost center. These big firms like Fidelity, they got their, it's kind of siloed in some small little group, and it's just, you're not going to get the same type of help. The other thing is you just have to remember you're no longer part of the company. And so you're better off getting those out there. But particularly if you're older, if you're getting in your 80s, it's a huge mistake to keep a plan in a 401k, an old 401k at the 401k, and not rolling it over. Again, it has different required minimum distribution rules, which a lot of people are not aware of. Actually, most people are not. The other thing, for estate purposes, it's an enormous amount of work. Whereas in an IRA, dealing with estates is really remarkably simple and very, very quick. Estates typically with old 401k plans are a complete mess. So, and we've kind of shifted. We really never really pressure people either way on these 401ks, but I've really come around to the fact that the rules are just different. That you shouldn't keep your money in these plans, particularly once you get over the age of 80. The withholding, the required minimum distributions, and the other thing is if you have an IRA somewhere, be it at Schwab or with us, at Max Out Savings Advisor, you have somebody that's going to be your advocate, that's going to try to that's going to fight for you, that's going to work with things to get it, to get things done. These people at these 401k, they don't care. We're still trying to determine if they actually have if they actually are required to, in our business, there's kind of like, you need to know your client. You need to know what their financial situation is, what they're expecting. I'm not sure with the 401k they even have that thing, so they don't even know who you are. They're not even bound by it. They don't really have the same regulatory stuff that like advisors do. Or these custodians of an IRA. It's much stricter, and so it's very surprising. So if you have an old 401k, my advice would be to move it out just because of that. And again, I've been really we work with a lot of people. I've been really kind of shocked at some of the. It tends to be with older people. It becomes a huge problem, and so something to think about there. The other thing is, I want to continue to touch base with really kind of go over a huge run up in the precious metal sector. You do want to take some off the table in the sector. If you look at gold's up 65%, silver's up 115%, over 115% year to date. Really way outperforming anything else out there, and it really probably the number one asset class. We wouldn't sell physical. I think you just hold physical very long term, physical gold coins, bars, whatever, silver bars, coins. The stocks, you want to manage those. It's easy to get overweighted in the sector. You want to kind of continue to manage them a little bit in here. Likely in 26, you're going to see some type of correction. In the sector, I think gold is being revalued because as they're resetting the financial system, as we've talked a lot about on the show, started after the war, Ukraine-Russia war, where the U.S. confiscated or froze the central bank assets. Countries around the world had to have an alternative financial system. The Chinese have stepped in, and they're kind of coming up with this kind of gold base using a renminbi or a basket of currencies, and central banks around the world are buying gold. And so it's moved up to a higher plateau. The silver, same thing. They're not really. It's not part of the financial system, but gold's gone up, so people are buying silver. There's huge demand for silver out there. For the last 5 years, silver consumption has used up all the mine supply, and there's been shortages. So they're just not making enough of it. And there's talk now of solid state batteries using a lot of silver that could go for 1,000 miles and charge in like 10 minutes. Again, you're using it with electric cars. You're using it in silver in AI centers. You're using it in defense work. And so there's just huge demand for silver. I think it's going to stay above $50, $45, $50. And there's real concern around the world that just countries continue to just print money. As bad as we think we have it with our $38 trillion worth of debt, the Europeans are just a complete basket case over there. And nobody trusts money around the world, because the minute things slow down, everybody knows they're going to print money, and it's going to be inflationary long term. Something to think about. Now, one of the more interesting things speaking of inflation is the CPI number was down. They were expecting about a 3% year over year. For the last 12 months, it came at 2.7%. For the month of November, it was only 2.2%. So it was virtually nothing. But it was well below expectations. But keep in mind, this is November. They're still dealing with the government shutdown. There was a lot of kind of asterisks in the number of different things they kind of, quote, guesstimated. I'm not sure I buy into that number. This is something we'll kind of have to see. If you look at the 10-year bond, it dropped some, but not a lot. It's actually been moving up throughout December. It's still 4.1%. So we'll have to kind of see. If you look at the dollar is just up fractionally, but I'm not sure we can really believe that number, just because there's so much unknown because of the government shutdown. And I think we'll get a better numbers starting in January, February. So this is something we want to watch. We still think there's liable to be more inflation. Now, oil prices have come down, but the question is, how long can oil stay at $57 a barrel over the long term? It's a very, very cheap price, and over time, I think Trump has been very successful at pushing down the price of oil to try to stabilize the different markets here. And so those are just some thoughts. Again, we've had 3 good years in the market. This is the 3rd good year, and I think you got to really question whether you're going to have a 4th one. But I do think the economy is going to be very good, but I think we're going to have some very unexpected things pop up next year, and I think you want to continue to be cautious. It's amazing how good a performance you can get, even with being very cautious with higher levels of cash out there. I mean, it's surprising, to me, how many of these portfolios we look at just are all 100% invested. They don't even have the performance we do typically, and I'm like, they're taking on huge amounts of risk, and I think risk management for 26 is really going to be one of the big key things. So anyway, a couple things I want to just touch base on, some house cleaning things. We want to mention also one of our sponsors, Rangoni Alto Gin. It's a fine botanical gin from the northern Italian Alps. They use all organic botanicals to put it together. They've been making these drinks for thousands of years, literally 1,000 years up there, and the tastes are just incredible. It's called Rangoni Alto Gin. Coming up on Christmas, if you get a chance, try a bottle. You can get it at Specs or Total Wine, and look for Rangoni Alto Gin. Look for the kingfisher bird on the label. The other thing is if you're not on our list, we send out a free Max Out Savings Report talking about retirement savings. different savings ideas. We talk about the markets. We try to get you in ahead of time of what the world's going to be. And it's a free report. We send it out once a month. It's called the Max Out Savings Report. Just go to maxoutsavings.com. That's maxoutsavings.com. And just hit the button for the free report. Give us your name and email, and we'll set you up. It's a private list, and we're not going to call you or bother you. It's got a very good track record over the long term of coming up with unique ideas. If you need some help with your retirement, if you have an old 401k or something, give us a call at Max Out Savings Advisors, or just go to the website, get the phone number, email us, and you can request an appointment. I'll sit down with you here in Houston, Texas, and we'll show you how we manage money using our value investing approach to the stock and bond markets. We hold our assets at Charles Schwab as our custodian, and then we simply manage it for you using our investment approaches. So if you need some help, go to the website, maxoutsavings.com. That's maxoutsavings.com. And also, remember our motto and philosophy, which is to save aggressively and invest conservatively. That, my friends, is the key to building up wealth over the long term. Save aggressively, invest conservatively. I hope everybody has a great weekend, and we'll see you next week right here on the Max Out Savings Show.
This has been the Max Out Savings Show with Ted Gioka, a presentation of Max Out Savings Advisors. Join us next Saturday at 10 a.m. for the Max Out Savings Show with Ted Gioka on AM 1070. The Answer.
Hi, I'm Sam Malone, the owner of Houston's cutting-edge media company called 512 New Media. At 512 New Media, we create amazing videos that companies use on their websites, telling their story in bold colors with exciting animation and graphics. At 512 New Media, we also shoot television commercials and instructional videos. And if you want to show off your business from the air, we're ready to go with our drone video aircraft. Let us help you create your media message. We're online at 512newmedia.com or call 281-822-8803. 512 New Media is Houston's only media creation and distribution company that's actually owned by someone who's currently on the air. And that gives us an incredible edge when creating content for consumers to use on their laptops, tablets, and smartphones. Standing by to create your message, we're 512 New Media, 512newmedia.com.